Hi, this is Jackie Cooper, and I'm with Jcoopertravels, and I would like to share the floor today with Sean. He is a good friend, and he is doing a wonderful service by helping individuals, both who have their own business as well as those that are working for others, learn how to protect their assets, all varieties. And Sean, thank you so much for coming today, and also giving us guidance so that way we can learn so much from you. Would you like to share more about your background?
Sure. Thank you, Jackie, for having me. I really appreciate this, especially during this COVID time. And so many people want to get any type of protection they can possibly get. About me, originally I'm from Tehran, Iran. I came here back in 1977, and after finishing school, I started in financial industry, and I started at a brokerage firms, and I learned my way from asset management, money management, different types of accounts, 401ks, life income annuities, all the way to protection of assets and protection of income, as well as life and other stuff.
So I have a short video that I want to show everyone, and then we're going to talk more about the details of it. So let me start playing it right now.
And as the value of our assets grow, it's important that we protect them from loss or damage. Let's take a moment and think about your most valuable assets. What about your home? How much is it currently worth? Let's say $500,000. Most people would agree that it makes sense to insure their home, so I assume that you have homeowners insurance, correct? Do you own a car? And how much is that worth? Maybe $25,000. And does it make sense to have it insured? Then there's your personal property. Maybe a boat, expensive electronics, jewelry. How much is your personal property worth? Let's say $80,000. Have you insured those items as well? Finally, have you considered what is truly your most valuable asset? Your ability to earn an income. What's your annual income? Now think about what your income is worth over time. Imagine over the next 30 years what your income could amount to even without annual increases. Your ability to earn an income is in fact your most valuable asset. What's more, it's your income that makes it possible for you to pay for all the other expenses in your life. Doesn't it make sense to insure your most valuable asset? Contact a Guardian representative today to learn more about income protection.
That was right on the money.
Yes, that was
so to speak.
That was very good, Jackie. And I tell you, we are one of the largest agencies for Guardian, and one of the most important area that a lot of people they don't recognize it is protecting their income, you know, and we have a ways of basically getting you through the underwriting. You know, not necessarily everybody's going to get approved, but I'll tell you a little more details about it. It goes through two separate underwriting. It goes through medical and financial underwriting. The reason it goes through them is because the financial underwriting, they want to make sure how much you've been making so they can actually cover you for that amount. They cannot cover you more than that. So same thing with the medical. If you had an injury, because it's a disability, long-term disability coverage. So to give you some details, 1 in 4 person between ages of 20 and 65 will be on long-term disability. And 90% of those that are on long-term disability has been caused by illnesses. Only 10% by accident. So when you say disability, everybody thinks about car accident, but that's only 10%. The other 90%, which is the biggest part, it could be cancer, heart disease, diabetes, stroke, a lot of other issues. And we run you through the medical underwriting because, you know, I had physicians that they went skiing and they broke a leg or knee or something. So they still get the coverage, except that one leg is going to be basically excluded from their policy. Same thing with their hands. If the surgeon had a problem with their hands, or if an attorney had a car accident and something happened to their back, the whole back might be excluded, you know. And then the financial side, we can get them pretty much about 60% of what they made over the last 2 years on average. So we need 2 years of tax returns and 2 paycheck stubs. Even if they're self-employed, you know, the returns and the, you know, more in details, we can go over it and help them out get qualified for that. So it's like you want to qualify as early as possible, because the longer you're going to wait, the chances of you have some sort of injury, some sort of illness, you could be in the hospital and have some sort of surgery. So that part, just all of these little things could be excluded. So just get it while you're healthy, get it while you're young. And remember, while you're young, the premium stays level. So the younger you are, the cheaper it is. The older you get, it goes higher. And you can get as low as 2 years of benefits, or like just say if you're in your 30s, you can get all the way coverage till age 70. So if something happened to you next year and you're in your 30s, you're gonna get like $6, $7, $8, $9 million throughout the career that you have, you know, because you're gonna be disabled forever. You know?
I know that it will depend upon a lot of factors, but would you say that how affordable is this on a monthly basis?
I tell you, it depends on your health situation, but it runs roughly about 3 to 5% of your income, between 3 and 5% of whatever you make.
And is there a way to have it taken out pre-tax
No.
or no? Okay.
And I don't recommend it. The
Okay.
reason for that is then the benefits would be taxable. You don't want that.
Got it.
So some companies offer in a group benefit a long-term disability, but again, you're going to get taxed on those. Plus, they usually have a cap. So their cap could be $20,000 a year, $30,000 a year. You know, they don't have like, they're not going to have all the way up as much as maybe if you get an individual disability, which is
Now, what happens if you take out this and you pass away? Is there a beneficiary, or how does that work?
Not on disability. It's just
Okay.
like any other protection, like your car insurance, like
Got
your
it.
home insurance. And remember, there's another one also, which I highly recommend, especially if you're a physician or doctor or dentist, or even if you're an attorney and have your own business. It's called business overhead expense coverage. And that is also a long-term disability, but it covers your business. So it covers your rent. And I've seen some physicians, they have $10,000, $15,000 a month in rent.
Yeah.
They're right next to a hospital. And then it covers your employees, your payroll, and it covers your utilities and any other office expenses you have. But the biggest important part is that it covers your replacement. And if you are a physician again, those patients, they're not going to wait for you 2 years to come back. So
No.
they need teeth cleaning, they're going to go to another doctor or whatever office is open. So this way, at least you're going to keep your practice open while you're on disability, and you have your individual disability, which is going to help your mortgage and your car payment and everything else. Because without an income, we can't survive.
No, it's true. So would you say that most of your clients are medical professionals, or are you able to help anyone?
I have about 50% medical, 10% attorney, and the other 40% are small business owners.
So when you define small business owner, that would be both like a one-person company on up, or what?
It could be more. It could be like, you know, have 10, 20, 50 employees. If they're more than that, I still take them as a client. It's just that then it might make sense to go with a group policy and get everybody else covered and go through payroll and that sort of thing. And maybe on top of that, get them an individual coverage for the owners.
Well, I know that you are extremely knowledgeable, and for individuals that are listening right now, are there maybe like 3 or 4 things that you can maybe suggest to them that they think about, so that way they understand why they need to use someone like yourself for having this type of plan? Is there like something that they can go through their mind, like, I don't have this, or I have this, what do you recommend?
So first thing I recommend is, of course, maybe have a free consultation with me, just to
Okay.
see what they have, and how their health is, how their income is, how long they've been at their job, what kind of job they have. And second thing is maybe review if they have a policy already, whether it's a life policy, long-term care, which is very important right now, or long-term disability or business overhead expense coverage. And that way I can review what they have, and let them know, well, you have something really good, just keep it, or this needs to be changed because it only covers this much of your salary, or maybe they got a coverage 10 years ago. And 10 years ago, their income was only $5,000 a month, and now they're making $15,000 a month. So they need to fill up the gap, so there's many reasons that they should actually get these reviewed at least once a year or once every 2 years, and see where they're at. And also like their life policy. They could be a term policy, and that may expire in 5 more years. And then what are they going to do after that? Maybe we can look at permanent cash value life insurance policy, which has a cash in it, has a long-term care rider in it, which they can use 90% of the death benefit. And also it never expires, and it has a level premium forever, so that way they don't run out. Because just imagine you're 40 years old and you get a 30 years policy. You want to protect your spouse and you want to protect your kids. 30 years later, now you're 70 years old and you didn't die, right? First of all, at age 70, most likely nobody's going to give you an insurance. You probably have thousands of medical issues could be wrong with you, for example. And on top of that, if you can find a company that can offer you a 5 or 10-year policy at age 70, the premium would be somewhere 10 to 15 times what you paid when you were 40 years old. So why take a chance, and why not go level premium while you can? And I'll tell you, on a permanent cash value, a lot of people may not look at it like that because it costs more upfront. Like it doesn't, I never use the word cost, because when you say cost, it's like the money that you're throwing out. If you need the cash, after 12 years or 13 years, you have more cash inside the policy than the premium that you put into the policy. So the cash will grow in the policy. That's why it's called permanent cash value life insurance. And you have access to it. And you can borrow against it.
I love what you said, though, about reassessing. Just like we go to a doctor for an annual checkup to see what's, where we are baseline and everything. I agree with you that even if you have policies in place, it's really important to always review them and to make sure that just like you are very ethical and honorable, if you have a good policy, you'll tell them. And, and so it is important to have trusted advisors, so that way you can make the right decisions, because all these financial decisions, they're kind of scary because we don't always know. And so we have to put, just, like with our doctors, we have to put a lot of faith that what they're telling us is true.
Exactly. And go with someone. I mean, I've been in the business for almost 30 years, and, believe me, I've seen the good, bad, and the ugly. So I've seen it all. And I can, worst case scenario is I tell you that you either need to change it or you're good, and you get a peace of mind, and you can go on with your life.
I know. Very, very true. That's so true. I really appreciate your sharing all that information. And today, I know that for the podcast and also on the YouTube channel, there'll be contact information. So that way, as you're listening, you can either reach out to me and we'll be able to get you a free checklist. So that way you can kind of assess for you, but we'll also have contact information. So that way you can reach directly out to Sean. I know, Sean, that I'm in the travel space, and and I'm also, I'm both a teacher, so I resonate with what you're talking about, both in terms of thinking about my own plans, and then I'm also a solo entrepreneur, so I have that hat. And I know I shared the I Go for Less platform with you. I know you're a world traveler. You were talking to me before we got started about a trip that you're thinking about taking, maybe to visit some friends in Wisconsin. What did you find when you were kind of checking out the I Go for Less platform?
Well, I'll tell you, and I'll share with the viewers that I went on it and I looked at the hotels, and there was several hotels that it gave me, and right away it was like for 5 nights, it gave me the regular price that everybody else paid. And then the next thing you know, it says $170 off, so it's like on every one of these that I looked, I had average anywhere from $100 to $170 off of the top price. So I highly recommend it. At least check it out, and see if it makes sense. And I'm telling you, it looks really good. I'd probably use it.
And the other great thing about it is it's free.
Yeah. Yeah.
It's
Yeah.
free to access. So
Yeah.
like you said, it's easy enough to check out. So any last minute thoughts that you want to share with our listeners?
I tell you, on the asset side, we had a huge run from the bottom. So I would be kind of careful here. The S&P and the Dow and everything went back up to where we were before the COVID thing ever happened. So, we still have large unemployment numbers and everything else. So I would be a little bit cautious on that, maybe raise some cash. As far as the protection side, I would highly recommend, before it's too late, for your viewers, just to call me or shoot me an email or send me a copy of their current policies, and let me just review it for them.
Yep, I think that's wise. I think that's a great thing to think about in today's climate and everything. So thank you so much for being on and being available to answer questions and just kind of give us a quick overview. I think this is something that I know when I was in my 20s, I never thought about. And I've been, advising my daughter to take a look at. So like you said, it doesn't matter what age you're at. We always need to be starting somewhere. And it's never too late to start, but it's always good to take that first step.
Exactly. Thank you so much for having me, Jackie. And I tell you, for the kids, even it's not too late. I have it for mine, and I would get it for everybody else's kids as well. It's important.
Yep, I agree with you. Thank you so much for being here today.
Thank you.